Hey everyone, and welcome back to the Deep Dive. You know those commercial real estate listings you've been checking out? Well, get ready because today we're doing a deep dive just for you.
Oh, this is going to be good.
We're going to break down this email you got from Eureka Business Group.
Okay.
It's dated October 26th, 2024, and it's from Joseph Goslan.
All right.
And here's a fun little detail. It even has a listen to this email option. Talk about keeping up with the times.
That's pretty cool. It is amazing how everything's going digital these days.
Right. Especially with the election coming up. This email is like a little snapshot of how the market's feeling right now.
Yeah, true.
Oh, and it even reminds us about year-end tax moves just in time.
Smart.
You think we might see some changes in the market after the election?
Yeah, probably. Elections always make people a little unsure, so they might hold back on investing for a bit.
Makes sense.
If you can figure out what everyone's thinking, though, that could be a real advantage.
So our mission today is to go through these listings and find the best opportunities.
Sure.
But we also want to understand why they're so good. What's making investors interested in this crazy market? We're looking for those hidden gems.
I like it. You know, commercial real estate can tell you a lot about the economy as a whole.
Oh, really?
Yeah. If we analyze these listings, we might get some insights into bigger economic trends.
That's fascinating. It's like we're real estate detectives.
I like that.
So Joseph was nice enough to group the listings by price range.
Yeah.
Under $2 million, $2 million to $5 million, and $5 million to $10 million.
Makes sense.
Let's start with that under $2 million category and see what we find. What do you think?
Let's do it.
Okay, first up, we've got an 11,970 square foot flex building.
Okay.
This one is going to make money from day one.
How so?
It's fully leased, so you don't even have to find tenants.
Oh, wow.
You can just start seeing that sweet, sweet return on your investment right away. That's a huge plus for people who want passive income.
For sure. Immediate cash flow is always a good thing for investors.
And this one's right near I-35, which is another bonus.
Oh, yeah. Good point. Easy access to transportation is a major plus for businesses, especially those dealing with logistics and such.
It all comes back to location, location, location. And speaking of location, this next listing is all about that hot new trend. Downtown living making a comeback.
Interesting.
We've got a 5,000 square foot retail space in downtown Denton. It's just waiting for the right investor to come along and add some value.
You know, we are seeing a lot more interest in downtown areas lately.
Why do you think that is?
Downtowns have that walkability, that sense of community, and a lively atmosphere that young professionals and families are looking for these days.
Ah, I see.
And when those people move in, businesses follow, which creates even more opportunities for investors.
This value add concept, can you break that down for us?
Sure. A value-add property means you can increase its value by fixing it up, making improvements, or maybe even changing its purpose a little.
Okay.
For example, this retail space could use a facelift, maybe turn it into a trendy cafe or a boutique to attract those downtown shoppers.
That's smart.
Yeah,
You're not just buying a property, you're investing in its potential.
exactly.
Okay, are you ready for our next stop? We're going to the land of recession-proof investments. Dollar General.
Ooh, a classic.
This is what some might call a defensive play when the economy's uncertain.
Makes sense.
Dollar stores, especially ones like Dollar General, actually tend to do better when the economy's not doing so well.
Yeah.
People become more careful with their money, and they look for those everyday items at affordable prices.
Right.
And this listing comes with an absolute NNN lease. Now, some people might not know what that means, so
Yeah, let's break it down.
NNN lease is also called a triple net lease, and it basically means the tenant takes care of all the operating expenses, property taxes, insurance, even maintenance.
Wow.
It's hands-off for the landlord, fewer responsibilities, and a nice, predictable income stream.
I can see why that would be attractive.
Of course, you always got to look at the lease terms and make sure the tenant's financially stable before you jump in.
Very important.
Right? Due diligence is key. But you've got a recession-resistant business model, a hands-off lease, and a high-traffic location. This seems like a pretty safe bet for someone looking for a stable investment.
It ticks a lot of boxes, for sure.
Now let's move up to the $2 million to $5 million range.
Right.
One listing that really stood out to me was a fully occupied retail center with a 7% cap rate.
Oh, yeah, cap rates. Always a good indicator.
So can you remind us how those work again?
Of course. The cap rate is how much income the property generates compared to its value.
Okay.
So a 7% cap rate is a pretty good sign. It means the property is generating a good amount of income for its price.
So it's a good place to start, but like you said before, it's not the only thing to consider.
You got it. You also need to think about the location. the lease terms, who the tenants are, and the overall health of the local market.
Right, right.
For example, a retail center with a strong anchor tenant and long-term leases in a growing area might be a better investment than one with short-term leases and a less desirable location, even if they both have similar cap rates.
Got it. So it's about looking at the whole picture.
Exactly.
Something else in this email caught my eye.
What's that?
It mentions a live show hosted by Eureka Business Group. Any idea what that could be?
Maybe they'll showcase their properties and other investment opportunities.
Take to guess.
They might even have some market experts sharing insights and predictions for what's going to happen after the election.
It's like getting a sneak peek behind the curtain.
Definitely.
Events like this are gold for staying informed.
For sure.
All right, before we head into the higher price ranges, let's do a quick recap of what we learned about this under $2 million category.
Sounds good.
What are your main takeaways?
Well, it looks like this price range offers a nice mix of options.
Okay.
You've got stable income-generating properties like that fully leased flex building and the Dollar General with its NNN lease.
Right.
And you've also got properties with value-add potential like that downtown Denton retail space. It really depends on your investment strategy, how much risk you're comfortable with, and what your financial goals are.
Exactly. And we're just scratching the surface here. There's so much opportunity out there, but it all comes down to understanding the trends and what's driving the market.
I agree.
You ready to move on to those pricier listings?
Let's do it. I'm excited to see what the $2 million to $5 million and $5 million to $10 million categories have in store.
All right, stay tuned, folks. We're going to the deep end of commercial real estate where the stakes are higher, but the potential rewards might be even greater. Okay, so we're back and ready to tackle those higher price listings.
Right.
We're moving up to the $2 million to $5 million category.
Okay.
What kind of properties do we usually see in this range?
Well, in this price point, you often see investors who want something stable, but with the potential to grow.
Okay.
We see a lot of multi-tenant retail centers, office buildings,